If you are looking for the good, the bad, and the ugly of the Twin Cities real estate market, you came to the right place. I'm going to give you an honest update that is supported by local Twin Cities data for the month of October. So buckle up and stick around until the end of the video. I will be covering trends in interest rates, buyer demand, and purchase prices, and will share my professional advice on where the market is projected to go. Heads up, it probably won't be pretty for a few months. I'm Bailey Beckman, a Twin Cities real estate expert. To kick us off, I'd like to show you where the median sales price of homes was at this month. Here, you can see the median price of homes in the Twin Cities was at $355,000. This is a $7,000 price drop from last month, which was expected as we head into the slower winter months. The sales price is still trending upwards, however, with a 4.4% increase in price compared to October of 2021. Here you can see that we have now hit 3 months in a row where the final offer prices on homes were at 100% of the original list price. For now, buyers can expect to pay closer to the list price versus mentally tacking on an additional $30,000 to account for multiple offers. Now, you might be wondering, why are offers closer to asking price? And the quick, easy answer to that is just buyer demand. Here you can see the median days on market is slowly creeping back up as we head into the slow season. We are now up to 21 days on market, a 44% increase compared to October of 2021. But roughly the same length of time on market as compared to the spring trends in 2019 before COVID. This is the signifier that we are just returning to a normal market, not a crash. The number of showings on homes has also dropped to 4.7 showings per listing, down about 27% from October of 2021. Buyer demand has cooled. Sorry to the sellers out there, but it is exactly what we were looking for and quite frankly needed to make home ownership an actual achievable goal. This leads into another question though. Where did the demand go? Did everyone finally get lucky and find a house to buy? Nope. A large part of buyers decided to pause their home search in hopes that the market would calm down and prices would drop to more affordable levels. But what ended up happening is the Fed increased interest rates to force a slowdown in spending to combat inflation. We are currently hovering right around a 7.1% interest rate, and if you are curious about the impact of interest rates on your overall buying power and how much house you can afford, then check out my market update video from September. But I have slightly bad news. Interest rates are projected to remain high, near the 7+% range, until spring of 2023. Now, there are a few mortgage professionals that believe we may hit closer to 5% this winter, or possibly early Q1 of 2023, but I wouldn't hold my breath. Inflation is a huge driver of mortgage rates, and there are still corrective measures that need to be taken by the Fed to cool spending. So what does all of this mean for the market here in the Twin Cities? We will continue to see a softening of buyer demand with higher interest rates impacting days on market, as well as offers closer to the original asking prices. But because we are still down in total inventory, the ball is still in a seller's market court. So homes may take longer to sell, but they won't be selling for pennies on a dollar like during the housing market crash. All this being said, is it a good time to buy a home? Yes, and here's why. Higher interest rates have reduced overall competition, so you aren't paying thousands of dollars above market value, but more importantly, you have flexibility to negotiate with sellers. You get to have an inspection, you get to request repairs, among a few other things that make it a little bit easier for you to purchase a home. Also, interest rates are constantly changing. How much you owe the bank for your home doesn't. Say you buy at 7% interest rates right now, and then they drop to 5%. You can refinance your loan, paying the lower interest rate and a more inexpensive home that you purchased not in multiple offers. But also let's say that interest rates go up. Then you are at least building your financial equity in a property that you own. Okay, there is your quick recap of the month of October using local Twin Cities data. If you are interested in a deeper dive into your specific neighborhood's data, let's connect. My contact information is in the description of the video. Subscribe to my YouTube channel for monthly market updates and fun tips and tidbits of the Twin Cities. Thanks for watching.